I initially invested in Godwin's GC8 for its security, drawn by the projected 12% annual return. While this return is on the lower end of what I'd usually expect for this type of investment, the added protection of a debenture and oversight by Bluewater Capital as a trustee made it appealing. Early on, I rated this investment highly, confident it would deliver within the original 24-month term. As we all know, the situation has since changed. Leading up to the bondholder meeting, Godwin sent out an investor circular explaining why this situation is happening and outlining their plan for the 12-month extension to repay investors with both capital and interest. However, they didn't clarify how returns would be affected. They only stated that repayments to investors would resume at the end of the proposed extension, expected toward the end of 2025. A few days later, a follow-up email addressed some FAQs. One key question was, what will my maturity date be, and will I accrue a third year's interest? Godwin confirmed that investors would earn a third year of interest at the current rate, maintaining the annualised return at 12%. And while this sounds promising, I'm concerned they might just be kicking the can down the road. If they can't afford to pay this level of interest now, it's reasonable to question whether they'll manage it in 12 months. When I raised this concern during the meeting, the Godwin board didn't respond directly. However, when addressing a similar question about avoiding the same position in the future, they reaffirmed that their forecasts have been verified by their advisors and they have sufficient resources to repay investors in the medium term. I admit it's a fair point. My score for return remains unchanged at 5 with a 10 times multiplier for 50.